Great. I am David Travers. I'm the moderator of the venture capital panel up here. I'm also a partner at Rustic Canyon Partners. We have an outstanding panel of strategic/acquirers, early stage and mid-stage funders up on this panel. So really great breadth of LA-based investing talent here, and a good cross-section from people who get really active and actually co-founding a company, to people who just invest, to people who acquire companies. And in talking to several of the entrepreneurs here tonight, I think should be a good fit for what people are looking to take away from this. So first thing I want to do is just have each of these guys introduce themselves, maybe starting with Shawn down at the end.
Hi everyone, I'm Mazzeo. I'm a partner at Lowercase Capital. Prior to Lowercase, I spent 8 years building out a venture and digital practice at creative artist agency here in town, native Angelino too.
Peter Lee with Baroda Ventures, seed fund in LA, focused on early stage consumer internet digital media investments. Been in VC for about 8 years and 2 startups before that.
Dave Fink, a partner with Science, and I have the fun of not only helping businesses get funded, but also get started and scaling.
Describe what Science is for those who don't know.
So Science is an operating entity. We essentially we help co-found businesses with either entrepreneurs already working on concepts, or we look for entrepreneurs that have vertical expertise to come and join startup projects that we're already working on.
Awesome. And I'm, like I said, David Travers with Rustic Canyon Partners. We're an early stage venture firm here based in Santa Monica. Also, we have an office up in San Francisco, currently investing out of a $200 million fund and looking to write checks between $100,000 and $10 million. So let's start off first with the LA community here. People have been talking about it out in the hallways. People have been talking about it up here on stage. And Peter, maybe you're a good person to start because you've seen it from the vantage point of 3 different investment firms here in town. Where is LA today? What's the good and the bad? And where do we need to go as a entrepreneurial ecosystem?
Yeah, so I've been in LA VC for about 8 years. 2 years with a firm called Clearstone Venture Partners, Series A fund, and then a firm out of Boston which opened up an LA office called Prism Ventures, and about 4 years with my current fund. By far the last 3-4 years have been the most active I've seen in LA. Not just the number of startups that are forming, but really the ecosystem you're seeing here, the number of advisors and investors who are working. I think the biggest difference I've seen since I started in the market is rather than having first, second generation entrepreneurs coming out. The difference, Silicon Valley is you have 5th, 6th, 10th generation entrepreneurs, guys who have been in and around startups for many, many years. In the last couple of years, I feel like the number of successes coming out of LA, especially early on, where you have exits and repeat entrepreneurs, has really created an ecosystem, not just for new entrepreneurs, but advisors and investors who are really helping the community. And so I think that's probably the biggest difference I've seen in terms of the activity and why it's being more successful now.
Shawn, you have sort of a different vantage point being at demand, but you've been involved here in the ecosystem for a long time too. How does that, do you agree, do you disagree? What do you see LA needing to do next to take it to the next level from an ecosystem standpoint?
I think LA is doing a lot of things right now, and I was in Silicon Valley for a number of years, and I was in London for a number of years, so I saw a couple of those different markets grow and evolve. LA is great as far as applications are concerned, and I think now that a lot of the platforms have been built, there are things that are just being built on top of those platforms. And so whether it's social commerce, which is just using the identity layer of Facebook, and whether it's some of the multi-channel networks who are riding on top of YouTube, those are going to be big businesses. I mean, there are some opportunities to build really interesting companies, and so what I think is maybe what the ecosystem needs is a little bit more second stage capital, because those opportunities are going to be bigger, and so there are a lot of companies, a lot of Valley companies who are Valley venture funds who come down and are willing to invest 10 or 15 or $20 million into any of those particular companies. And so there aren't that many firms in LA that can or are willing to write those types of checks for any one company given the size of their funds.
Yep.
But I think that'll change over time.
Yep. And what Lowercase, very established early stage brand in Silicon Valley, what made you guys decide to start up an effort down here?
You know, I think it was a couple of things. Chris, my partner Chris, early founder or early investor in Twitter and Kickstarter and a handful of other businesses. Chris was seeing this massive trend that the cost of content acquisition was becoming so low, creation so low, and the venture funds in the Valley sort of had been burned so many times by content-based businesses, and really had a fear, I think, of investing into businesses that were going to sort of build those applications on top of these the pipes that have been created in the last decade. And saw an arbitrage there, that there was going to be awesome value to be created if you weren't afraid to invest in capital-efficient content businesses and everything around discovery and recommendation. The Valley just sort of has this, I think, opinion of LA is opaque and sort of layered with hangers-on and managers and agents and lawyers, and don't really the big R of rights just scares a lot of that investment capital from coming down to LA. And so there was an opportunity to create a new fund focused on technology that would innovate in that segment if you could navigate it correctly. And so I think that was the part of the motivation. But I agree with Shawn that we need more of those funds to sort of come down here and spend real capital and time.
Well, we don't need those funds coming down. We need more funds here.
Yeah, both. The combination, I think. But yeah.
Yep. So in talking to a lot of the entrepreneurs here, it seems like a lot of people in this room, or several of the people I've talked to in this room, are looking to raise their first round of capital or first, call it $1 million or less in the next 90 days. How many, just by show of hands, how many of you out there fall into that category? Great. Okay, so each of you, actually I'd love, but starting with you, Dave, because companies are coming to you right at that stage all the time. Give people your 60-second, here are your like 3 drop-dead things you absolutely have to do to be successful at fundraising in the current environment.
Well, I think there's one main, one key to successful fundraising, and that's data. You need to know your business, not just from the concept and from kind of the general execution level, but you need to understand what are the metrics behind your business. So what drives revenue, what drives user engagement, what drives growth. And that data shows that you have a command of your business, and therefore that when you receive that $500,000, $1 million, $2 million of capital, you're likely to spend it wisely. The number one, I think, kind of turnoff that we see, early stage startups coming and pitching us for is they want money, and as soon as we ask them what they're going to do with the money, they have no idea how they're going to spend it. They can talk in generalities such as team and marketing, but when you actually drive down and you ask them, okay, great, well, can you divide up that $1 million into who you're going to hire? Have you targeted those specific hires that you're going to make? What are they going to cost? When you ask questions around what are the channels that you're going to deploy that capital in order to efficiently grow your business, those that can answer those questions very clearly, it's a no-brainer. We want to get involved with. Those that can't answer those questions, it's a bit of a black hole.
Agree or disagree, Peter?
I agree. I would say some of that does come potentially a little bit later. The thought process has to be there, but there needs to be a lot of experimentation and testing to actually get some of the data. But they definitely have to have thought through that and have a vision towards it.
It's cheaper now, than ever before to get some of that data.
Yeah, that's true. I think one of the biggest things I see in LA companies is too narrow focus on a small market. They want widgets and features, and when you think about big markets, someone says, I'm going after, something in the automobile industry, it's a whatever, multi-hundred billion, trillion-dollar industry. Well, that's not revenue you're making unless you're making a Tesla car. I mean, you're a sliver of a piece of a functionality, and so you really have to understand what your revenue model is and how big the market you're going after. And then probably the second thing I see are the teams. And I think there's definitely a lot of scrappy teams who are willing to go out and put themselves at risk. But the worst thing I hear is an entrepreneur comes and says, well, if you fund me, I'll quit my job. Or if you fund me, I'll be able to do this. I was like, well, if you were really passionate about your business, you had already done that. And you're coming to me because you're convincing me that the best thing I can do with my money is to invest it because you're going to do it with or without me. And not really having that commitment, it's a real turnoff. So it's sort of team and market for me.
So I want to come back to the team thing, but let's get tactical here for the people who want to raise money. If you have a conversation, it's your first time raising money, you're having a conversation with a VC or a seed stage angel, and they say, hey, sounds really cool, I love the idea, I love you, but I'm a little worried about the metrics. Why don't you come back to me when you have a little more metrics, when this metric and that metric, you have a little better understanding of exactly how it scales and how big the market is. If you're the entrepreneur sitting in those shoes, hearing those words, what do you do with that?
Well, you have a couple options. How much can you bootstrap and get some of those metrics? As you mentioned, you can spend a very little money on Google AdWords to test out some marketing, customer acquisition. You can have a lot of tools out there that are free to build platforms. So be scrappy and get something up and running. Second thing is move on from that investor. There are certain investors who are just not going to move forward with a certain stage company, and you really have to know who you're targeting. So do your homework before you walk into a VC, and don't ask uneducated questions about what you expect them to do if they don't focus on that industry or that space or that sector or that stage. You need to build your business, and raising capital is a requirement, but it takes time for your business. So really focus your fundraising efforts and find the right investors who will work at the stage you do and get as much traction as you can without them.
And I would also add that if you're asked questions that you don't have the answer to at that specific meeting, there's nothing more impressive than coming back a week later, 2 weeks later, a month later with answers to those questions, because you've shown that investor that, one, you've taken kind of their advice to heart, and two, you've done the work to come back and provide those answers.
Yeah, I think there's another challenge that I see often in this marketplace, which is people look at different pieces of a challenge, and they try to take on all of those pieces of the challenge in a single swipe, and they say, here's 8 revenue streams that we're going to build out of this business, and this solution solves 3 different problems for these different constituents. And I find that to be a real challenge as well. Lack of focus over exactly which problem you're solving and the revenue stream associated with that one. And few enough businesses get one revenue stream right that to go out there and try to tackle so many problems out of the gate, I think is a real challenge for early entrepreneurs who want to solve every bit of the challenge. And then team founder fit, not just founder fit in terms of scrappy and going out there and doing it, but being able to tell the story correctly about why you're the right person to tackle that challenge is an important thing for us. I think we love to have stories from founders. One of the entrepreneurs we invested in recently, a company called Inventure, her name's Shivani. Just the story behind her, she's going after the third world. She spent 3 years sitting in small businesses on behalf of the UN after her career in finance. And the story that she tells around how she's building this feature phone-enabled Intuit for that world is perfect. She couldn't be a better fit for that. And I think that's a huge piece of it as well, is figuring out the story. There was the dog walker story we thought was a really good avenue earlier tonight. But nailing your pitch of why you're the perfect person to tackle the problem is a good thing that we look for.
So I like all that stuff, but I have to say the most recent angel or seed stage investment that I made, what the entrepreneur did brilliantly was, despite the fact he was a first-time entrepreneur and had not raised money before, he created a track record for himself we had a nice first meeting, I gently passed, said a lot of the things that you guys talked about. He came back with thoughtful answers, but he also magically had 3 people that I knew really well call me up or email me afterwards to say, hey, I heard you just met with Hamilton. He's an amazing guy. Let me tell you all the incredible things I've seen him do over the past year. And then all of a sudden, people I really know and trust who I know don't have a vested interest one way or another, other than wanting to see the right thing happen to a good guy, all of a sudden a track record was created out of nothing by A, good follow-up himself, and B, getting other people to vouch for him. And that really differentiated himself from the pack. So I think that's another good way to go. So Shawn, from your perspective, you're a guy who, when an early stage entrepreneur here strikes up a conversation with you after this could be either an angel investor, you're a successful entrepreneur, co-founder of Demand, or you could also be an acquirer. And one thing I've seen a lot more over the past year are very early seed stage companies faced with a real choice between, hey, I have the ability to raise $500,000, or I have a potential acquirer who's already interested in buying me. Put yourself in the entrepreneur's shoes. How should you think about that trade-off and that fork in the road?
That's a good question, and I have never been in those shoes, so so it's hard.
Yeah.
It's a hard one to answer from the perspective of the entrepreneur. I mean, I guess I would say, it's all about risk and return, and it's all about however you feel personally at that moment in time about whatever your risk profile is. So we have done, we buy, we tend to buy things that are a little bit more established. So they've either raised money or they haven't, but they've been able to build a successful business on their own. So I know you guys, and this is a pretty diverse group, so people see things very early stage. And so when we look to buy talent, it's oftentimes, if it's really just the talent, they're almost in some ways glorified employment contracts. I mean, I don't know if you guys have, there are other examples of, quote, acqui-hires or whatever.
Sometimes unglorified.
Unglorified. But, a lot of times all those are just maybe some return of capital for some of the investors and then full-time jobs for the employees.
Yeah.
Which, look, it can be, those can be very accretive for a buyer, because it's much easier to find a team that's been working together and get them started on a new project than it is to necessarily find and hire a new team or a new set of developers. So, from our perspective, we do like to buy teams. We generally have a very specialized view of what we're looking for at any given time, which changes, by the way. That's maybe the only thing I would say is, if you haven't had success with a strategic acquirer at some moment in time, don't dismiss those guys down the road because maybe they've already said no. I mean, it's not unlike in some ways the venture business, right? Because just like, we're all entrepreneurs and our business has changed so rapidly. Maybe 6 months ago, we were a lot more interested in video than we are now. Maybe now we're interested in social commerce or conversions and things like that. So there's just, at any given time, situations change. So it's really, you got to sort of, in some ways it's luck. A lot of this business is luck, but just being in the right place at the right time.
Yeah. Matthew, so for Lowercase, you guys have invested in companies like Twitter that have turned down many acquisition offers over the years to great effect. And you've also had a bunch of companies that have sold, much sooner than getting to a Twitter-like outcome. When that opportunity arises, when an really early stage company has the opportunity to take money off the table or continue to grow, how do you advise an entrepreneur about that? So
the process that we go through generally is we end up sort of removing the entrepreneur from the environment. Almost every time one of our entrepreneurs gets one of those calls, we tell them to hit the pause button, because there's this moment, I think, as an entrepreneur where you sort of immediately have this gut towards, like, check coming in, I need to close it. Like, there's this fear moment of, is this going to be my big exit moment, or is this the only opportunity I have to see cash? And we take them out of that environment. Generally, Chris, my partner, has a place in Truckee where we tend to take them, and and what we do is we have them sit down in front of a whiteboard and lay out everything that they were hoping for outside of this sort of opportunity. What are the things that they really care about in an acquisition? Is it the ability to continue to work on that product as it existed, to keep the team intact? Where does money fall on that priority line? But think through all of those priorities. It's not just the cash of the moment, which is the sticker shock is sort of everything. Everybody's eyes goes immediately to that final number. But go through everything that you want the next few years of your life to be, and take your time with that transaction. Because I think being thoughtful beyond just that, we all have stories of the entrepreneur who sold and just hated the experience of going there, but it looked like the right cash at the moment. And we try to optimize for the entirety of what the transaction means in terms of lifestyle, in terms of this isn't your last exit, in terms of, so I think that patience is an important piece of it.
But there definitely are exit windows, right?
Yeah.
I mean, you also have to be aware that when someone comes and makes you an offer, you ought to really consider it.
But I think the optimization needs to be against like more than simply the sticker price. Like for the entrepreneurs, and if you're an investor and you're going to be working with these entrepreneurs, hopefully in the future, you know, you want to make sure that all the externalities are taken into consideration.
Oh, of course, yeah, for sure.
So besides an investor, if you're in that situation, besides an investor, who should you go seek counsel from if you've never been in that situation yourself? Because your investor, in some ways, is on your side, but in some ways may have a different set of incentives than you do.
100% talk to the other companies that have gone through that transaction, or the ones that have, that have been approached and decided not to go through that transaction more likely. I make the same recommendation to companies that, that we're looking to invest in, is to come back and look at the portfolio companies that we got into that had a tough time, to get a real sense of the, our value and how we behaved in that. It's all well and good when the transaction goes great, but look for the bad behavior moments and find out from entrepreneurs who sold and didn't have a great time, or whose products were shut down, or whatever their priority list is. Go to the players who had a similar instance before, yep, of the toughest time with that potential acquirer, if there is an opportunity like that.
Yep. Great advice. Okay, I would love to, we have a great panel here, and I would love to have a few questions from the audience before we wrap it up. So this is your big moment. This is your chance to not plug your company, but ask a deeply insightful question that will cause all 5 of us to come find you afterwards and write you a check. So by show of hands, or anybody's welcome to come up to the, if you come up to the microphone so everyone hears you, that would be great.
I'm just wondering, I know in the Valley we're seeing a lot of issues of price inflation and people sort of chasing after certain deals in certain categories, and it almost feels like there's this, from a venture perspective, there's a real gap in how much money you can put in when versus how much you can expect to get out. And I just see these large price increases at sort of the Series A with decent metrics, and I wonder how we're going to make money in that environment. I'm just wondering if you're seeing a different sort of dynamic down here, if you're feeling that same sense that prices are really running away, or how do you feel about the current pricing environment? And I'm really interested across the sort of the seed through Series A. I get sort of after that, but I'm interested down in the early stage part.
Yeah, so I think LA is sheltered a bit from some of the Valley prices. There's definitely enough communication and information flow that plenty of LA entrepreneurs who are just starting off hear stories of Bay Area investment valuations, and they want to pitch the same thing here. I don't know what the number is. I wouldn't be surprised if it's sort of 30% discount or more on Bay Area valuations down here. The other piece that I think does help is LA, because of experience set, other things, there's a little bit more focus on monetization versus pure growth that the Valley has. And part of that is, the Valley is really looking for the Facebook and Twitter, and don't focus on monetization, plow everything into growth. I think LA, because of the DNA, because of the skill set, there is more of a consciousness toward monetization. And so I think there are opportunities, for companies who can monetize and get to revenue quickly, where smaller exits are doable because you have businesses that are already generating revenue, have a business model.
So I would turn the question a little bit, because what I see too many first-time entrepreneurs do is think about that question in the way you phrased it, which leads people who maybe haven't studied the nature of financings and term sheets too much to think just about a pre-money valuation and just about dilution or top-line dilution. And I think that can create a bunch of problems and shows some short-sightedness on the part of the entrepreneur in terms of what really matters. So in other words, if you tell me, and I'm interested in your company, and you tell me I need an $8 million pre-money, I can give you that $8 million pre-money and take 90% of your proceeds in any situation because of all the other terms that are available. So what's really interesting to me and exciting to me as an early stage funder is somebody who I see is really good at being on the fundraising side of the table, because if things go well, you're likely going to be fundraising again several more times, and then I, as the funder, I'm going to be on your side of the table at that point. And so I want to see somebody who is optimizing for a fair deal, which is very entrepreneur friendly, but not necessarily optimizing for the last penny of dilution. I want to see somebody who's picking great partners who are going to help grow the business, often help by getting out of the way of a great entrepreneur. And I want to see somebody who's really focused on alignment of incentives rather than just optimizing for certain, if I get $10 million in my pocket at the end of the day, that's great. So if you come at it with a level of sophistication like that, I'm much more excited about backing you and know that your subsequent financing rounds are going to be really successful and you're not going to get in the way of yourself, and that's very exciting to me as an early stage entrepreneur. What do you guys think about that?
Yeah, I mean, well, like we've, I always try to counsel people to maximize your optionality. So I've seen way too many, and now as a strategic buyer for the last 6 or 7 years, I mean, I've seen way too many companies that were good companies that I would have liked to acquire at a reasonable price themselves out of a deal just because they had raised money at such a high price as a first round, and maybe it was 5 million or 10 million at some crazy price, and it was worth, to me, maybe it was worth 10 or 15 million dollars, or some number like below where they had raised money, but yet that creates so many challenges and tension between an entrepreneur and an investor. And if the entrepreneur had just been a little bit smarter about pricing and capital raising, they would have had a much better outcome. They would have had a successful exit. They would have made money. And so that's the advice I give a lot of people down in LA. And I do think that is more rational. I do think you do see probably 30% is probably a reasonable estimate just in terms of pricing. But I do feel like people here are looking for, it's a little bit more of a single and double culture as opposed to a home run culture. And which is great, because I think as you get enough guys hitting singles and doubles and triples, we'll find some home runs along the way. But
great. Were you next? Yeah. I think he was. Oh, he was. Okay, great.
Appreciate it. So I was going to ask, you guys mentioned about trends earlier and about VCs going through different 6-month trends. I was kind of wondering, where do you guys see the trend right now? Where do you see the area that you're most excited about to get involved in as a venture capitalist?
Yeah. Dave, you guys have funded 15 companies the past year. What are the trends you see?
20.
Yeah.
That's right. I think we're in a unique position because we're fairly trend agnostic to some extent. We're looking for opportunities to get involved with smart teams that are showing some traction and creating opportunity. All we're looking to do is create value. This is LA, and commerce and revenue, as some of these other fellow panelists have mentioned, is king. So we really like getting involved in businesses that have a clear path to monetization. And I think we're on a panel talking about venture. The nature of monetization-driven businesses is that kind of things tend to fall in line. So meaning that valuations are driven by the success of the business and the value that business has created. So I don't think I have a whole lot of perspective on any specific trend other than here in LA, we need to make sure that the businesses we're involved with can generate revenue.
Revenue is trendy. What do you think, Peter?
Well, did you have a question more about different sectors and spaces, or dynamics at certain stages, like seed stage versus Series A?
It was more about sectors and spaces.
Sectors. I don't know if I have any other insight than what everyone sees. Content is great here. Commerce is great. E-commerce, ad tech is strong in LA. Broadly, you're seeing mobile, the whole, crowdsourcing and sort of shared economy. I don't necessarily have that vision. I'm hoping the entrepreneur is going to come to me, and I'll be able to pick it if someone entrepreneur comes up with it. But I don't know if I have any vision beyond what most of the people who are tracking the trends already see.
Sure. Yeah, I think we're seeing all of those. The science guys are starting a shaving trend. Not sure. Seeing a ton. I think the MCN's created this great ecosystem around video that's finally organized. a ton of influencers out there, and so you've seen a bunch of businesses being built on other platforms that specialize in influencers, and so you'll see some similar sort of tools and services built for the video economy that I think are fascinating and getting built. I'm seeing a ton of those. I'm seeing a lot in mobile around live events and sort of online to offline. Those kinds of experiences I think are really fascinating that mobile's cracked open. I think a lot of the entertainment industry is starting to see sort of new pricing models that are coming out, and so you know, data analytics have provided new sort of tiered pricings that's available. You see it, everything from like Kickstarter to the subscription around Movie Pass that's coming out. I think those are fascinating trends that I'm interested in.
Yeah, I'm a big fan of paid content, actually. So if done right, and especially from a video-centric point of view. So online learning is obviously a huge trend, and I think there are a lot of companies in LA that are actually pretty well positioned to go after certain segments of those markets. Typically, people will approach them from a vertical standpoint. Like lynda.com is a pretty successful company in Santa Barbara. I mean, those guys have done really well by focusing on one niche and doing it well. For sure. So we're looking for those companies.
And I would also mention that if there was a trend that I'd love this room to help continue to create here in Los Angeles, it would be ad technology. So I don't think there's a business in any of our portfolios that doesn't need help growing. So any business that's focused on helping our businesses grow is very fascinating.
Sure. Thank you.
I like the revenue trend, Dave. I think that was the best answer. Yeah.
Nice. Revenue is hot.
Yeah, you win.
Remember that. Yes.
So, sort of an extension to that question, I wanted to get your thoughts on mobile wallet and e-commerce, and what are one or two things that really need to be addressed to be successful in that space?
So the second part you drove, so I heard mobile wallet and e-commerce.
And e-commerce, and what do you think are one or two questions that really need to be addressed to be successful in that space?
Well, the two biggest questions I see all the time are why companies that were started more than 12 months ago aren't more focused on mobile, because every time I'm in a board meeting or meeting with a company and I ask them to tell me what percentage of their traffic is mobile, it's amazing the number that don't know right away and then come back and be like, oh yeah, it's 48%. And do you have a mobile optimized site? No, we don't. So it's incredible, and you see that in the dearth of mobile development talent that's out there. But specifically when it comes to mobile wallet makes me nervous because I think the beauty of mobile and the danger of mobile is that you have to be you can be, but you have to be so simple. And too many times I've seen mobile wallet equate to really complex, overly wrought and thought out products. So, but when you make something really simple and it's compelling and makes sense when you're on the go and when you have a small screen and when you don't have a keyboard, it's incredible. People will spend more money in the right situation on mobile for what you might have previously thought was more of a desktop product. People think really differently psychologically about paying for something on mobile. They've just been trained differently to think about what's free and what's not free in a really interesting way. So big, mobile commerce overall, really excited. Mobile wallet, I don't know specifically, but makes me a little nervous because I've seen too many poorly thought out products in that space. I don't know. What do you guys think? Anything else? Okay, good. Yes?
Thank you.
Gentlemen, thank you. I'm enjoying this.
Last question, so no pressure.
No pressure at all.
Don't think about it, just let it happen.
Well, to your first challenge, how to get you to come to me, I kind of had an interesting situation. We actually just turned down a full Series A round. It was the hardest thing I've ever done in my life. It was
huge mistake. Go ahead.
Yeah.
Well, I love it. You got our attention.
Okay. Here's my question. My company name is Family Shield, by the way. In going through that process, it went rather quick, and we ended up, in the end, with a lot more questions than we had answers about, we all read the books, we've all done the studying. Is there an avenue to talk to angel groups, and instead of getting a formal presentation and coming to you, approaching you with an executive summary or something and either buying or getting a half-hour consultation, some sort of interaction to help answer a couple of the questions that came up that we didn't have the opportunity to maybe reshape the way we would have approached. What we're thinking is, instead of a full Series A, we'd much rather approach this with a seed round. That's one of the reasons we're here. And we haven't been able to find, because there's so much, you guys get, there's so many deals that you're presented with. We can't seem to, there's no magic email address where we can send an email to Rustic Partners or somebody where we'll get a call or get a half hour. Are there mentors or people out there that will give us a little bit of time?
No.
Okay. That was easy.
To be honest, I hate the whole premise of the question, because I think you should, rather than, you can say you're looking for advice, but the reality is you're always fundraising. Even if you don't need money, you should always be building relationships for when you do need it or do want it. So you have quick phone calls with people who know you, know your business, are excited about you, and you're already a proven entity in their minds. So rather than, resources or mentors, what you're looking about is you want to start funding conversations in advance of needing a check tomorrow. And so now's the right time to do that. And the right way to do that is not, you can ask for people for advice, and that's probably in some cases better than asking them for a 1-hour meeting. But what you really should be doing is figuring out who in this room, and there are 20 people in this room who know all of us, and if one of those 20 people emailed me or any of these other guys tomorrow and said, you really need to meet with this entrepreneur, I would stop reading the email right there, reply, great, let's set it up. And I don't know what your business is, I don't know what your name is, and so what you need to be doing is getting an introduction from one of those people that we trust, or I trust, or whomever your target is that's a good fit for your business, and getting that qualified introduction so that when I'm meeting you, I'm leaning in rather than skeptically leaning back.
Great, and now show of hands, who knows David? I'd like to buy you a drink later.
I was bluffing, I don't know any of these people.
Where's Ezra? He'll sell you some time. Where is he? There he is.
Okay, thank you very much.
Great. Thank you very much to the panel. Thank you, Bambi, for organizing.
Thank you, Bambi.
Thank you all for being here.
Thanks,